Hello and welcome to Crypto Weeklies. In this video, we are analyzing Solana and its token Sol. None of the content is financial advice. This is one chart which tries to explain what is happening with Solana, if it's in accumulation phase or distribution phase, using the time weighted average price approach, or just to understand it well, it's the gravity of time based approach. Not looking at the current price, but in relation that current price in relation to the entirety of its asset class or market cycle presence since 2020. How is the current price looking with respect to the time spent across his entire life? If it is undervalued, that means you are essentially beating the clock at entering at level where market has spent very less time. So whenever the price is below the blue line, essentially that accumulating at those point, again not financial advice, this enables entry at those point where the price has spent very little time. Fair value or closer to the blue line, that's where we are currently. Right now the price of Sol is very close to the time weighted average price. There is only deviation of about 7%. The time weighted average price is at around $86. The price of Sol is at around $80. In the last bear market, at one point the difference between the price and time weighted average price was 80%. That was just a undervaluation zone that correlated or coincided with the FTX collapse. So if you were to normalize this behavior and just ignore this U-shaped recovery pattern and just draw a straight line over here and ignore this area over here and just have a drawdown, which is like a linear drawdown starting from that 2022 May bottom till about, let's say, 2023 June 2023 bottom, then ignoring this 80% drop from the time weighted average price, the lowest Sol went was at around 70%. Just ignoring the noise of that FTX collapse related downturn. So this time around, again, as the asset matures, the drop from the time weighted average price could be much less severe. So let's say only 50% down, between 30 to 50% down from the time weighted average price. The time weighted average price is an increasing function. Right now it's at around $87, roughly speaking. If it goes to $90, when the difference is at around 30%, then 30%, deducting 30% from 90 would be deducting $27. And if subtracting $27 from $90 would give you $63. So $63 could be one potential bottom using this time weighted average price approach. If the extension goes to 50%, then again 50% of 90 is $45. So the range is between $45 and $65 for Sol's bottom per the time weighted average price approach. Nonetheless, this model also helps identify the overvaluation where the price extends so far from the time weighted average price is essentially borrowing from future. That means the gravity of time likely takes the price and mean reverts back to that time weighted average price, like it does eventually in the bear market years such as 2022 or 2026 for that matter. Sol is having its second bear market year, major bear market year. The first time it was in a bear market. Back then the time weighted average price at the bear market, again when the price went below the time weighted average price in May of 2022, back then the time weighted average price was $57. Right now is at around $87. So the $30 increment over the last 4 years in terms of the time weighted average price is definitely a good indication that at least the time weighted average price for the asset is growing with time. That means there is some adoption. So that also metric helps identify where the asset or the underlying asset has a chance once the bear market, and if the bear market is over, there is a higher chance, as the time weighted average price model would suggest, that the directionality of the time weighted average price is going up with time, not down with time. And again, this is very rare in crypto asset class. Only a handful of assets have that upward bias for time weighted average price. These assets are Bitcoin, ETH, Sol, and a few notable mentions here or there. You can check, by the way, this chart is available on my website, cryptoweeklies.com, link on the bottom of your screen. This website has several other indicators such as social sentiment, how is it either rising or falling, what are some of the popular narratives, what are the composite risk score of assets such as, for example, Sol over here is in accumulation phase. The composite risk is less than 0.3, but again, it's not as low as Bitcoin or ETH at this point. So again, it's an opportunity cost where again the higher cap assets are having less composite risk than Sol. Again, you can check out the time weighted average price model for Sol, and another note, again, top 10 to 20 cryptos by market cap are sorted differently, and then again ones which are outside top 20 but in top 100, they also have that time weighted average price model. So for example, assets such as Algo over here, you can see that the slope of the time weighted average price is going down with time and not up with time. So that's the reality for most of the cryptos over here. Again, Phantom was discontinued, it now moved. So for example, Quant over here. So these higher cap cryptos have a decent chance of staying relevant. Again, HBAR would be another example where the time weighted average price is going up with time, not down with time. But the ones which are again fallen off the radar and then did not have that kind of a great season since launch. So for example, ICP over here is consistently going down with time weighted average price. Even Polkadot and its token DOT, see the downward slope of the time weighted average price. Bitcoin Cash recently has bucked that trend, but you can for the longest time the time weighted average price was essentially a zone of resistance and kept on going down with time. Now the price in this bear market is still holding above the time weighted average price for BCH. So these kind of analysis all again personally developed and maintained on this website for all, no subscription or sign-ups or monetization needed. This is just a benefit for every crypto related investor. Again, my personal mission is again to help the new investors in this new asset class, which do not usually rely on data science and fundamentals but are more driven by the narratives, just providing that kind of datas for these investors on this asset class to help them on their investment journey, and not offer any financial advice, just data science and technical analysis related interpretations. The OHLC based summary says that again the price with respect to the key moving average, the 20 week, that 100 week and 200 week for Sol, again is the normalized risk has gone down. That's because the 200 week simple moving average again was not available in 2022. So the first time Sol completed 200 weeks as an asset was in 2024. So again, take this model as with a grain of salt. The DCA model that we haven't seen, but again the polynomial regression based fair value, this is the one area of concern for Sol. The polynomial regression based model says that the fair value is going down with time. So it might take a conclusion of the bear market for Sol to be meaningfully above the time above the regression based fair value, like it eventually made its way in March of 2024. And at one point the deviation between the price and the fair value was again almost 5x or 5 to 6x difference between what was the price, around $10, whereas the fair value was at around $60, roughly speaking. So Sol came a long way in that last bull run. Even the 20-week simple moving average price risk has gone down per our models. It's in the lowest risk level at around 0.09. Again, whenever it's in this plum color or purple color, it's usually at least come off of a significant rally, and then new lows are established. There is either a major counter trend rally, or then again at least there is one counter trend rally, or then again closer to the conclusion of the bear market. So that's where we were again even in 2025 and towards December 2025 and April 2025. So all in all, Sol, if it were to be analyzed from the bottoming perspective, if let's say this is the machine learning model trained on the weekly price action of Sol and helps identify what could be the bear case, bull case and the base case using seasonal ARIMA based forecasting technique, and as well as LSTM based machine learning models. So this model says that again, if there is only 3 to 4 months of downturn, let's say starting March, So now we are at end of February, March, and again timeline to be decided. Let's say 2 months out into the future would be end of April. Then the support for Sol with that 2 months downturn is at around $45, close to that target that we mentioned, at around $45, which kind of coincides with the time weighted average price based deviation. If let's say unfortunately price action has to stay bearish for 3 months, then the support is at around $42 to $43. Again, I don't believe that the asset has to stay down only for 6 months. Again, no assets, again, even in the bear market, in the last bear market, there were counter trend rallies along the way. The downturn does not last for that long, and essentially, especially where the current downturn, one could argue, began in January, and then the one prior to that began in September 2025. So we have already spent about 5 months in that in the existing downturn with this minuscule counter trend rally from late December to mid January. That couple of weeks or 3 weeks of counter trend rally, again quite similar to where April 2022 was, and from that downturn from April to let's say end of June, so 3 months of 2.5 to 3 months of downturn from April to mid June. So similarly from mid January to the 2.5 months would be end of March. So let's say at that point, if there is some relief, then the area of support in that scenario is at around $60 to $65. These are the weekly averages. Again, coming back to that time weighted average price based deviation and the difference between the price and the time weighted average price going to that between 30% to 50%. Those are the most what you can say confluent zones where the price action could go. Long story short, as the price action is very close to the fair value, it does not warrant that kind of attention with respect to the best time to accumulate, but it also comes with a caveat that it's not the worst time to accumulate either. Especially you can see that towards the euphoria phase of the asset class, the difference between the price and the time weighted average price, even in this lackluster 2025 bull run for altcoins, where there wasn't like a relevant or significant altcoin season, even in that environment, the difference between the price and the time weighted average price for Sol at the peak was more than 275%. At one point it was around 300% in late 2024, and also in early 2024 it was at around, the difference was at around 315%. So those indicators do help identify, again, whenever the risk levels goes above point, let's say above 6 or 7 for Sol, DCA out at those levels also helps at not be a bag holder for the next bear market. You can have your own risk tolerance. The last time Sol did not go to the risk level 10 in 2025, it concluded in risk level 9. Next time, probably as the asset class matures, maybe at risk level 8 or 7 would be a key level to watch for whenever that potential altcoin season occurs. So again, these models have a dual purpose. Even the one that is a regression based model has not been that useful for Sol as the time weighted average price is. But for much more established assets such as Bitcoin, actually the DCA model makes the most amount of sense, where again the regression based fair value helps identify what phase of the asset class or the market cycle the current price is and what's the regression based risk. So again, Sol not the primary mover of the asset class. The asset class is largely held by, the market share is largely held by Bitcoin and ETH. Together, roughly speaking, 70% or 68 to 70% is held by, the market share is held by these assets. And again, of the 31%, most of it is again, the large chunk of it is held by stable coins, which are essentially fiat currencies wrapped into a crypto based platform. So coming back to Sol, what could theoretically happen? Again, this is forward looking model. If let's say the bottom for 2026 is essentially at around $64, again price for Sol is about $20 away from here. If we expect that in 2029, with that compound annual growth based projection of 45% growth year over year, that diminished version of a bull run, the price could top out at around $200 for Sol, from $64 to $200. And then if this trend were to continue in 2033 at 300, in 2037 at around 450. And again, this assumes one bear market along the way, like it does from, let's say, 2029 to 2030, and end of 2030 again, and similarly a peak in 2029, and then lows established in 2030. Like 2026 is a bear market year, potentially 2030 is again, and 2034, and then 2038, all depending on the past cycles and the 4-year market cycle theory. This still projects in 2041, like 3 bull runs from now, 2029, 2033 and 2037. The 4th bull run, the price of Sol could be at around $700 in a worst case scenario. In a more of a volatile bull run, where the growth is, let's say, instead of 45% to 55%, there are instances where the price could rise faster but then again fall faster as well. So if you tune out the noise for multiple cycles and essentially 1.5 decade, what you have over here is what the directionality of that price action could, with significant adoptions on the way, could provide the price in future. So those are, again, all of the models are available not just for Sol, for other major assets as well on the website. What we will conclude with is the estimated bear market bottoms. For starting with the Solana bear market, estimated bear market bottom is, what's the worst case scenario the price action could go to in 2026? That's at around $47 again, which is kind of in line with that secondary zone of confluence for Sol. Now that we are coming to close to 2 months completion of the bear market, the base drawdown over here is at around $47. The worst case scenario is at around $37 for Sol. That's roughly speaking between 42% to 50% down in 2026. If we were to estimate what Sol could do on a bullish note in 2029, or let's say several bull markets into the future, the base peak for Sol as an asset is at around $1,600 to $1,700. Again, it might take more than 2 to 3 bull runs, but again, that's just a projection based on these models. Again, take it with a grain of salt. The best way to identify what the bullishness or the bullish ceiling for the next bull run could be is this red line over here. The likely, again, ignore the time for this moment. The 3 standard deviation ceiling for Sol is at around $500, and that's the target that I am sticking with the current information at hand. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.